Okay, good day guys. Welcome back to my channel. Today I'll be taking a presentation. I'll be doing a live presentation of titled 7 mistakes you're probably making right now in trading. I've been longing to do this presentation for some time now, but at least thank God now it's possible. Okay, yeah, I'll be taking you on the 7 mistakes you're probably making right now in trading. And I'll give you some hidden facts to becoming a profitable Forex and binary trader. Okay, let's get started with the introduction. Okay, yeah, we know trading is tricky and there are lots of mistakes you can make. Let's take a look at the 7 popular mistakes novice traders make, and some of you, and ways to avoid them. Okay, I know trading is tricky. You have to be smart to trade. Many people come into trading because they feel with simple mouse click they could make thousands of dollars, but I tell you it's not really easy. When trading, we all make mistakes, yes I know, especially in the very beginning of our trading journey. As we learn a lot, new things and strive to implement them correctly. Yes, even the most iconic traders make mistakes. I do make mistakes. But why make mistakes that you can easily avoid? Yes, you can easily avoid those mistakes. You can take practical steps to make sure you don't make mistakes in trading again. Okay, the first mistake you're probably making right now is that you don't have a trading plan or rules. Most traders just barge into the market every day to make profits and end up trading recklessly because they don't have a trading plan, they don't have rules. Some characteristics of a trading plan is that you should know how many trades you want to take a day, when you should stop trading, how many percent of your account you want to take. You should have a daily target and a weekly target. And you should have your rules. How many times you should lose before you stop, all those things. You should write them down. Every trader must have a notebook where you have your trading plan and rules. Okay, as the saying goes, you plan your trade and trade your plan. So anything that does not work with a plan cannot be accomplished properly. So as a trader, you must plan your trade and trade your plan. And you have to know the number of trades you want to take a day. I've said that. You don't just go into the market and start trading. You must plan how many trades you want to take. Then track your percentage loss. Example, I tell people, if you lose more than 5 to 7% of your equity, of your balance, you have to stop trading and prepare for tomorrow. I don't trade, I don't risk more than that. Once you lose that a day is enough to stop. Okay, no matter how tempting this may look, you have to abide by the rules. When you start keeping and abiding to these rules, your equity curve will start growing, it will start rising. Okay, you need to stop. You need to stop adding your money to the market. Look at this image right here. You can see this is a kind of funny image, but it is a serious thing. These are retail traders and this is the forex market. You add your money to the market every day because you're trying to make huge profit. You don't have a trading plan, you don't have rules. You can see your little $50, $30. You keep on adding them to the market. And they're telling you that this market has a daily turnover of $5 trillion every day. Hey, how can you still be adding to the market? You have to stop. Okay, you have to forget what the social media has portrayed to you. I know some of us, when you go on YouTube, you start watching videos, how to do compound strategy, make so amount of money in 5 minutes, do thousands of dollars in 20 minutes. Hey, It's not really easy to do all those magic. How many times you've watched those videos and you came into your account and you did such a thing? It's not really easy. You don't know what those guys have gone through. I'm not saying they are bad, but it takes time. So you have to set rules and trading plan before you get to that level. You have to determine your risk appetite. I advise you use at least 2 to 5% of your equity per trade, depending on your tolerance level. Okay, every trader has his own tolerance level, what you want to lose on each trade. But this is what I advise. 2 to 5% of your account is okay per trade. And maximum trades per day is 5. To me, I take 5. I don't know about you. And that's what I advise my traders, people under me. That's what I tell them to do. Now, to avoid emotional trading and mental fatigue, once your daily target is achieved, you close IQ option immediately. You close the application, you close the market. Advise people maximum trade 5. To me, but you can take 10 if you like, but I don't trade more than that. Because if you trade more than that, the trading is tricky, like we said. It's brainstorming. Okay, so you taking more than 5 trades, you have mental fatigue. You start trading emotionally. Okay, you have to treat trading like a full-time business. 30% return per month is profitable, and you can see the theme of this presentation is becoming a profitable trader in 2020. Okay, so you have to measure your trading with percentage. It's not by making $50 today, $30 tomorrow, $30 tomorrow, and in 3 days time you lost $100. You can see that's not how it works. You're not profitable. When there is a difference between being profitable and making profit. Today I can trade and make $200. Next tomorrow I can trade and lose $500. Am I profitable? But I thought I made profit yesterday. So you see the difference? It's not the same. Most not trading the financial markets, it works with percentage. So you have to track your progress by percentage returns. Okay, I had a guy on my group one time like that. He posted trade 5 compound strategy. He made about 5 trades. 5 compound strategy. I said high five, good, nice one. But a few days later, he chatted me up again and told me that he had lost almost all his accounts. You see? So it's not about making big profits. You can make profit in a day, but in the long run, you're not profitable. Okay. You need to ask yourself this question. Am I a trader or a gambler? It's a tough question you need to ask yourself. You can see this image here. In order to become the 1%, you must do what other 99% won't do. So in order to become the few people that are profitable in the market, you can hear it every day that in this industry, 80 to 90% of traders lose their money. So in order to stay above that, you have to have your trading plans and rules. Okay, 87%. The last time I checked, I don't know, but the last time I checked, the statistics I checked, they said 87% of traders lose their money in this market. So now, after you've answered this question, let me give you my own definition. A trader looks for consistency, while a gambler looks for quick profit. So you can see it now. You can ask yourself, am I a trader or a gambler? If you're a trader, you should be fighting for consistency. And if you're a gambler, I don't know. Okay, we'll go over to the second mistake you're making right now. After you have set your trading rules, and you have a trading plan. Now, what market to trade on? You have to look for a trending market whereby you can blindly see the market direction. Okay? Underline that word. Blindly. When I mean blindly, even the blind can see that this is an uptrend or this is a downtrend. So you have to follow the trend. It's a very popular trading quote. The trend is your friend. But I tell people, how do you follow the trend when you don't know where the trend is going to? I was meditating sometime and I was thinking, we do here follow the trend every day in the market. When you want to learn trading, they will tell you follow the trend. But I was meditating one morning and I asked myself, how can the trend be my friend? Because if the trend is my friend, I have to know where it's going to. So how do you follow your friend when you don't know where your friend is going to? So the tricky part of trading is that you can't follow the trend when you don't know where the trend is going to. So for you to know where the trend is going to, maybe that will be another discussion for another day. Okay, let's continue. So don't trade in a chopping market or a ranging market. Example of this kind of market are so many wicks. You see so many wicks in the market. I advise you try having some pet pairs and create good relationship with them. I have my own pet pairs. You can see me most of the time when I trade Euro card or NZD USD or USD card. I don't know. Other pairs work with candlestick psychology. Other pairs respect price action. But I just don't know. Most of the time, the pairs, anything I analyze, they came to fruition. Okay? You can have your own. But I am telling you that most of the times, even though I'm wrong, the pair does not just give me a loss. I'm telling you, the pairs are different. Pairs are powerful. You have to know the kind of pairs you trade on. There was a time I was trading sometime. You know, GBP card and GBP NZD. Most of the GBP pairs, they move in the same direction and they have similar candles. And I placed a higher option on GBP NZD. And that trade was a loss. It was an OTM. I had a weak bearish candle there. But when I switched the chart over to GBP card, I saw a good bullish candle. I was so angry. I was so mad. That trade took me off the market that day. So this to tell you that pairs are powerful. You have to know the kind of pairs you trade on and have some favorite pairs. Even on IQ option there, you see where they click. If you click that star, you can keep it a favorite pair. So they know that as a trader, you need a favorite pair. So the bottom line is that don't fight against the market momentum. You have to follow the markets. What you see, you observe the market for levels and you follow them. Okay. Now this is a screenshot here of AEDJPY. I want to ask you, is this a trending market? Can you follow the trend in this kind of market, in such a market? Is this a good market? No, this is a very bad market. You can see so many weeks on this market. So many weeks. I can't trade on this market. That's why most of the time when you see me, when you're watching my videos, once I choose a pair, I'll just say no, because the market is not clear. I can't blindly see who has this market here. You can see red candle, green candle, red candle. So it's not good to trade on such a market like this. So you look for a trending market. So here's another example of Euro NZD. I took a screenshot of this. What do you see? What's the difference between this market and the other market I just showed you? You can see this is a clear trending market. You can blindly see the trend here. You see it? You can see that this, I can tell you everything that happened here from the start here to the end here. And you can see how I marked out my levels and the price action was respecting them. So you have to trade on such a market like this. Okay? This is a good market. You can see when sellers entered, you see weak sellers entry. Sellers broke this level, buyers retraced, buyers entered again. Sellers entered strongly. You can place a lower option here. without emotion, without fear. You can place a lower option again. And you can see definitely this is another level, maybe another level in past history, but I can't show you that now. And you can see how buyers enter. You can see how this pair is obeying price action. Everything is just going smoothly. So this is the kind of market you should be trading on. Okay? So after you know your trading rules now, you have your trading plan, you have your goals, and now you know the kind of market to trade on. The third mistake you're making right now is that you have poor market analysis. Technical analysis is the framework in which traders study price movement. The theory is that a person can look at historical price movement and determine the current trading condition and potential price movement. Okay, this is the whole framework about technical analysis. Okay, so you study historical price movement. One of my friends said that if you want to know the future, check the past. And there is a popular saying that history always repeats itself. So you have to check the past history so you can determine the next price movement. Okay, and you do this technical analysis with the usage of lines, chart patterns, and other charting tools to predict the price movement. Never rely solely on indicators. I will dwell on this. So many of you trade with indicators. You lack proper market analysis. You lack price action. You need to go for knowledge so that you can understand price action. Don't misquote me. I don't say trading with indicators are bad, but you don't rely solely on them. You have to understand price action. And some of you rely on bots and automated systems. Hey, I would advise you stop that. I know people that use bots and automated system. Today they have blocked their accounts. You know, all those stuff you use to trade to get big profits. You have to succumb to the process. You have to learn price action. These bots and automated systems won't help you. Okay? So trade pure price action because the chart is a candlestick chart. Okay, let me give you an illustration here. When you open the market, once you choose the kind of chart you want, what do you choose? You choose candlestick chart, right? And if you change it to bar chart, what do you focus on? What do you choose? You read the bars, right? In a bar chart, you read the bars. Am I correct? You don't look at indicators. I know some old traders back in the days, some big traders, when candlestick chart was not popular, they use bar chart for their analysis and they read the bars. So why, when you switch to candlestick chart, you don't focus on the candles? Once you choose candlestick chart reflects what price has done. Indicators just copy or interpret after. Okay? Now, relying solely on indicators are very bad. They can be dangerous. I advise you put 89% of your attention on candlesticks and 11% on indicators. When you're trading, I advise you put 89% of your attention in indicators. Sincerely, I'm not a fan of indicators. I've used indicators in my early stage of trading, but I found out it was not really good for me. It was not really good for my trading. You can see when I trade pure price action. I don't even use Fibonacci, all those. I don't use anything. The highest thing you can see on my chart is trend line or horizontal line. Okay, but I'm not saying indicators are bad. I know huge guys, big traders that use indicators. If you see their charts is filled with indicators and they are profitable, but I bet you they know price action. They know price action first. So you have to know price action and then you can just add it up in indicators. Analysis is hard, but trading is much harder. I know analysis are hard, but I bet you it's trading that is much harder. You can see chart reflects what has happened, while indicators just should interpret them afterwards. Okay, so you have to know price action first, and then you can add it up in indicators. Okay, indicators might be a validation just to balance your trading. Now you can see this striking quote here from Nefula, one of the big guys in the industry. He said trading with indicators is second-hand information, and trading with price action is first-hand information. Okay, I don't know if how many of you that know Nefula. He's a very big guy in the industry. So he's telling you about trading with indicators. Trading with indicators are second-hand information. So I advise people to trade with pure price action, pure candlesticks. Okay, you have to submit to the process, you have to submit to it, you have to submit to learning. Then things will begin to turn for you. Okay, here is a screenshot of my chart. This was my early stage of trading. You can see this was 14th, that should be 14th March or 14th April. Okay, 14th May 2019. That's about a year ago. You can see my chart. What do you see here? You can see Bollinger Band, 50 EMA, 20 EMA. You can see how rough the chart is. Okay, this was my chart then, and you can see my history. It was bad. I never knew how to trade. I never understood price action. You can see my balance. It was really detrimental to my account. Okay, so I've tested indicators before, and I found out that it was not really good for my trading. It doesn't fit me. You can see the kind of market I was trading on. This was a bad market. I didn't even know what I was doing. I didn't even know what was happening here. All I know was that if price comes to this lower Bollinger Band, I'll buy. If it comes low, higher, I sell. But you can imagine buying here. You lost. So you have to learn price action and proper technical analysis. Then things will start turning for you. Okay, so now you have your trading rules and plans. You can now know the market to trade on. Then you know technical analysis. The fourth mistake you're making right now is that you do emotional and revenge trading. This could be very bad. Emotional and revenge trading. Your emotional state is of a tremendous importance when you trade. Getting rid of your emotion is the very first thing to becoming a successful trader. I bet you emotions are very powerful. Emotions can haunt you when you're trading. So you need to learn how to control your emotions. So many traders don't really understand this. Fear and greed. Those are the two powerful words in this trading industry. I tell people, greed puts you on a trade and fear takes you out. So when the market starts going against you, you start wishing and hoping that, oh God, it shouldn't hit my stop loss. It should close above my entry point. You start crying. You bring out your chaplets. I don't know if you're a Christian or a Muslim. You start praying. So you don't need all those that. You don't need all those that. You don't need that. Okay? So emotional trading can be very detrimental to your trading. I'm telling you, it's very bad. It can be very detrimental. It clouds your mind. Emotional trading, it clouds your thinking. It's a reverse psychology. I tell people it's a reverse psychology. That's why you see people that when they trade, they do well in demo accounts, and in real accounts, they lost money. It's a reverse psychology. So you have to work on your emotions. You have to learn to control them. This is very powerful. So many traders think that it's just about learning how to trade, learning chart patterns, learning candlestick. But uh, emotions are very powerful. You need to learn how to control them. And in this market, you don't need to be 100% correct or right to make money. You just have to control your emotions, and things will start turning for you. And never give room to your brain voice. This is very important. You see on demo, when you see a signal, you place the trade. But in real account, your brain voice will be fighting. You'll be struggling. You know that this thing is supposed to go this way, but you'll be struggling to do that. I can remember in my early stage of trading, when I started trading, once I open the chart, my hands are literally shaking. My hands are literally shaking. I can't even click. I'll see a trade, but I can't click. I'm so scared. I was swimming in fear, emotions, and greed. You see? But today the story is different because I've learned to control my emotions. Okay? So you really need to learn how to control your emotions. Then revenge trading. I advise people, when you have a stream of losses, you relax, take a break, and concentrate on activities that are unrelated to trading. You take a break, spend time with your family, relax, stay off the market for some time. Okay? I advise people, when you lost up to 50% of your equity, you stop. You stop trading, and you go back to your study materials. You have to go back to them. You don't need to start chasing your losses. Reverse trading is simply a road to oblivion. Example, dog chasing bird. Okay, you can see this image here. I have an image here. Choices made in anger can never be undone. I bet you this was the image that broke my that gave me light. This image make me to break even. The day I saw this image, I was wowed. This is you representing the dog, and the bird are your losses. So this is you. When you do revenge trading, you lost one, you start doing martingali, or what they call it. You start trying to get back your losses. You can see you end up blowing your account. So revenge trading is very bad. I've been able to raise my account. I was trading an account of $20. I was able to raise that account to $50 in 3 days. I think 3 days. The last day I was like, okay, let me just make it $70. The account was $20 and I made it $50. So I was like, let me make it $70. Then I took the first trade, and when I lost, I got emotional because it was not my account. I wanted to make big profit and send the money to the guy. I had to use all the account, and I ended up blowing the account. I was so mad. You know, so you need to learn to relax, and that's why rule one is very important. You have to have your trading rules and plan. You have to have your stop loss targets. How many times you need to lose for you to stop trading. So I tell people, the best way to trade without losses is to manage your losses. This is I know this is not let me read again so that you can understand. The best way to trade without losses is to manage your losses. Every trader lose money. It's part of the business. Every business have profit and loss. I've told you, you don't need to be 100% correct and right every time to make money in this market. So you just have to manage your losses. Okay? So I think you've had a great section. I will talk about uh the fifth mistake you're making. But before that, I don't want this video to be too long. I just want to, I'll post this video and I'll post this should be the part 1. By tomorrow or next, I'll be showing you guys the remaining 3 mistakes you're probably making right now. But all I want you to do, I want you to hit the comment section. I want you to tell me if this video has been helpful. I want to see your engagement. I want to see your likes. I want to see your shares. Okay? If I see the response, I'll be able to post the part 2 of this video as quickly as possible. But I want to see your comments. I want to see your likes. I want to see your shares. Show me that these points I've given you are helpful, so I can be able to make the part 2 of this video very fast. Okay, I think that will be all for today. I hope this video was helpful. This presentation was helpful. You have to hit the subscribe button and the notification bell so you can always get notified when I upload my next video. I guess you don't want to miss the part 2 of this video. Okay, I think that will be all for now. I wish you good luck and good trading.